right. So you are welcome to a continuation of the tax planning that we are learning. Now, last week, we made a very interesting statement and which we have been writing on for a very long time. Very, very long time. And it was about the, today I'm doing the entity variable, but before we move on, remember we did something on free zones, right? And notable among the things we talked about under free zone was the taxation of the dividend of the for taxation on dividends to shareholders. Do you remember what we said when it comes to free zone investors? Do you remember? Anybody? I think this guy is the one that mentioned it again. So, and he's not in class today. Ishmael. But anybody with any remembrance what we did about the dividend to the shareholders? So it means that my people didn't go over. Last week, we made a pronouncement that dividend to the shareholders of free zones are exempt from withholding taxes. All right. And this, you know, the free zone has an act on its own. We have the Free Zone Act 504. It's called the Free Zone Act 504. And in the Free Zone Act 504, when you read section 28, subsection 3, it makes this pronouncement that the dividend that is paid to the shareholders are exempt from tax, withholding tax. Now, and in this year, I don't know how many of you know this company, the Cargill Ghana Limited. Do you know them? Cargill Ghana Limited. They are in Tema. They are with us here in Tema. Cargill Ghana Limited. And do you know them?
Yeah, I've heard about it.
Yeah. So these people paid dividend and they didn't withhold tax. And so it's per this law. That is it. As a matter of fact, when I was writing my CIT way back 2021, this statement has been there, and it is what every student has been learning. We learn, we write on, we learn, we write on. But this year, something happened. So the whole issue is that GRA went to do audits on Cargill. So I'm trying to break down the issue for you. Then Cargill had made payments to shareholders without deducting dividend. So the audit team in GRA raised it as an issue. All right. And that is because they didn't pay the withholding tax on the dividend, they are going to suffer interest on non-payment of that. So, and plus, they will still have to pay the dividend. So they have to pay the withholding tax on it and the interest, all right, for non-payment. Now, the legal team, the tax legal department of Cargill, held on to the provision of this act, all right, Act 504, Section 28, Subsection 3. And that is what we mentioned last week. Now, GRA and the Commissioner General issued a statement. Now, and I want you to follow it carefully because right now, as it stands, when they did this, the legal team raised, GRA is saying that they have to pay the withholding tax and they have to even pay interest on it. And the legal team of Cargill has raised an objection to that tax decision that the GRA people have made. Of course, if I were to be part of the Cargill team, probably I would have also followed you because when you are operating in a free zone area, anyway, a free zone area is any area that has been designated free zone. But we all know in Tema, we know the free zone enclave, right? if you are in Tema, you should have an idea where the free zone enclave is. Now, the main issue is this, and I want you to take note of it carefully because this thing can be an examinable question also, and it's a good question for practice. Now, when they raise the objection, GRA has now come to state the Commissioner General's position on that thing we learned last week. So this is the Commissioner General's position. And I'm going to read it with you, all right? So we are going to read it together so that you actually get the understanding of what we are doing. Because I've told you that tax is a life course, all right? You don't learn it and throw away. It's something that you do. Now look at the date of this letter. It is in this year, all right? That's the date of the letter. Now, so GRA is telling us the Commissioner General's position on the taxation of dividends arising out of free zone. So the Commissioner General is giving his position. All right, so that is that. Now, you know that if you raise an objection, we did it in tax administration. If you raise an objection and the Commissioner General still doesn't back your objection, you can now go to the Tax Appeals Board. So let's see what will happen. Because this is the day the Commissioner General brought out his clarity on the issue. That is June, about 3 months ago, all right? That, yeah, like kind of. And so Cargill had 30 days to appeal it. So let's see, let's wait and see if they appealed it. You will see the position of the appeals board too. Now, this is what the GRA is saying, and let's read it together. And it says that the Commissioner General has taken notice of an objection made in favor of your company. He addressed the thing to the Managing Director of Cargill by the Appellate Committee of Accra Estate Area of Ghana Revenue Authority on tax decision, on tax on dividend payment to shareholders of Cargill Limited, a free zone entity. The authority is of the view that the objection decision was contrary to the position of the law relative to the taxation of dividend payments and wishes to clarify its position on the taxation of dividend payment by a free zone company as follows. Now, honestly, God willing, tomorrow I'll call the Assistant Commissioner General on tax policy on this issue. I'll call him on that to also hear from him, because the reason is that he has books in which these things are written. Okay, so if this judgment has come, I want to see how he will kind of, if there is an amendment he has to make in his books and anything, I want to see how it will go. So I'll call him tomorrow on that. Now, it says that, and indeed, this is the act. This is our tax act. So they first make reference to section 5, section 7, subsection 5. The tax law, section 7, talks about exemptions. Now, and Ghana also has an exemption act. All right. So if you look at section 7, subsection 5, they quoted it here. So you could see it is quoted. All right. It says that section 7, subsection 5 of the Act 896 provide that despite any law to the contrary, an exemption shall not be provided from tax imposed by the Income Tax Act, and an agreement shall not be entered into that purport to affect the application of this act, except as provided by this act grants that exemption. So it is just trying to say that any exemption that is given must conform to Act 896. That is what it is saying. Now, that is what you see here. It says that in the act, this is how it is written. Despite any law to the contrary, an exemption shall not be provided from tax imposed by this act, and an agreement shall not be entered into that affect or purports to affect the application of this act, except provided by this act. So it is basically saying that every exemption that is being granted must conform to this act. All right, every exemption, so far as it concerns income taxation, which is, of course, withholding taxes part, it must conform to this act. All right. Now, interestingly, when you go to section 136, So section 136 of this one, it talks about repeals and savings. So when the law came, it repealed or it canceled some things and it also saved some things. And one of the things that it canceled is what we are trying to look here. So section 136, subsection 1B. So this is section 100, this is a subsection, this is the B. All right. And it says that any other laws to the extent that they are inconsistent with this act. So it repealed any other law. It repealed any other law to the extent that they are inconsistent with this act. So what is it trying to mean is this. If we are talking about income tax, if the Free Zone Act gives an exemption, all right, if the Free Zone Act gives an exemption, and the Act 896 is not giving that exemption, there is inconsistency. And so when it comes to that, any other law, including the Free Zone Act 504, to the extent that it is inconsistent with Act 896, has been repealed. So that is what it is trying to say. Now, so the letter goes on to read and says that dividend payment is subjected to withholding tax under section 115 of Act 896. So quickly, just to help you appreciate, you put in section 115, all right? And this is section 115. And section 115 talks about the withholding tax. So, and I have spotted this issue before, even with the local taxation and the foreign taxation of this free zone. I've spotted an issue around it before, even in our act here, which is inconsistent with what we have even in the ICA book and in some books. Yeah, so sometimes it's very tricky. Now, look at it. It says that dividend is subjected to withholding tax under section 150. So if you read section 115, which is also in connection with the first schedule, it says that therefore any exemption granted in any legislation, such as the one in the Free Zone Act, all right, is inconsistent with the provision and therefore cease to have any legal effect by the combined effect of section 7, subsection 5, and section 136. So what they are trying to say is that so long as withholding tax is applicable on dividend as per section 115, all right. So let's search section 115. You will see, all right. So section 115 talks about withholding tax from investment returns. So we come here. So withholding tax on investment return. So these are the withholding tax issues. So it talks about withholding tax on dividend. All right. So it says that the payment has the source in the country. All right. So it says that if you read it where it says a resident person shall withhold dividends at a tax rate in the paragraph 8 of the first schedule, where that person pays any dividend, lottery winning, interest, and natural resource payment, rent, loyalty, and royalty to another person, and the person has the source, the payment as a source from Ghana. So I think what is happening is that the Cargill people, the investors are not really Ghanaians, but you see, they are sourcing the money from Ghana. So it means withholding tax apply. But so that is the issue. So here there is withholding tax on investment. And if you want to see these ones, we go to the first schedule and we go to the paragraph 8 of the first schedule. So that is how you learn the law, honestly. So this is the first schedule. This is paragraph 1. You scroll down, this is paragraph 2. Scroll down, this is paragraph 8. And so it talks about these. These are the rates of withholding taxes. All right. So in the case of dividend, you are supposed to withhold 8%. So the 8% is what they did not withhold. And you see, here, the law never mentioned whether it is dividend to a free zone person or not. It said dividend. So regardless of whoever is operating the issue, once it is dividend, they have to deduct withholding tax of 8%. Now, you see, that said, so the law, this letter, per what the Commissioner General is saying is that when he combines Section 7, subsection 5, then Section 136, subsection 1B, there has to be a dividend on payment made to shareholders of, what do we call it, free zone investors. So now, after that, this is what happens. It now says that upon coming into force at 896, Section 28, subsection 3 of the Free Zone Act 1995, Act 504, which granted exemption to shareholders from the payment of dividends arising out of free zone investment, has been repealed as far as Section 136 is concerned. So it is trying to say that since the Act 896 came into force, the Section 28, subsection 3 of the Free Zone Act does not work anymore. So it means they have to withhold tax on dividend. Now, and in federals, they said, if you look at the Section 38, subsection 1 of the Exemption Act, which came in 2022, it also makes mention expressly that a provision in any legislation other than value-added tax, which came in 2013, income tax, Act 896, and excise duty tax, a treaty agreement of convention, or a document provides for grant of an extension is repealed. So it tells you that the Section 36, subsection 1 of the Exemption Act has also come out to expressly repeal certain exemptions. All right. So that is in this act. So if you read carefully, it says that this section expressly provide that a provision in any legislation other than, so the only ones that can stand at the coming of the Exemption Act in 2022 is these three that he mentioned: value-added tax, income tax, then excise duty tax. Any other exemption that is provided apart from these three laws is out. It has been repealed. So it doesn't hold anymore. So basically, that is what this letter is saying. Now, it now goes on to say that accordingly, it is our position that our original tax decision, which was reversed by the objection decision, posited the correct position of the law on taxation on dividends arising from free zone investment. Now, that the objection decision of the appellant committee, which has been reproduced as follows. So this is what they are saying. So basically, if you read this part, what this part is trying to tell you is that Cargill team are saying that a free zone is distinct, is on its own foreign territory. So it says that if you read carefully, it goes on to say that further to the interpretation of Act 896 and the Free Zone Act, it suffices to say that the Free Zone Act is a specific act that operates in a foreign territory. So they are trying to say that a Free Zone Act cannot be seen as a general act. They are seeing a free zone to be operating in a foreign territory because other tax laws does not affect free zone. Hence, the Section 136, subsection 1 to 3 of the Income Tax Act do not override the position of Section 28, subsection 3. So they are basically saying that free zone is distinct, and so therefore no law overrides it. Now, the commissioner therefore now says that in Ghana, the position of a tax law stated by the Supreme Court in the case of the Republic versus the High Court, Fast Track Division, Accra, as parte National Lottery Authority, Ghana Lotto Operators Association, and other interested parties. This is like a class action that happened, where the court held that nobody, including the court, can act or give judgment contrary to a statute that is an act passed by Parliament. So you cannot decide any other thing by an act. So per what they are saying, they're saying that you cannot say free zone is operating on a foreign territory, and so therefore a free zone is also in the country. So, and they said that the recent case that is between Blue Skies Limited and the Commissioner General, this is the suit number, where the court was called upon to determine whether there was inconsistency in paragraph 4 of the first schedule of Act 896 and section 28 of the Free Zone Act states that reading the act as a whole and applying the literalist approach, we rule that there is no inconsistency between paragraph 4 of the first schedule to the Income Tax Act and the section 28 subsection 2 of the Free Zone. Indeed, any inconsistency to the extent, so they quoted the section 136. So that is how the court judged the case. So they now say that the authority, in view of the above Court of Appeal decision, settles the issue of implied repeal of provisions of Free Zone Act 1995. And therefore, they say that the objection decision of the appellant committee, although made contrary to the Act 896, was only binding on the Commissioner General, was limited to 2017 to 2020 years of assessment, and does not extend to cover subsequent tax audits. So they are basically saying that, and that is the conclusion here. Consequently, you are strongly advised to apply the Commissioner General's position on taxation of dividend payments arising from free zone investment after year of assessment 2020. So they are trying to tell us that what we learned last week that has been standing is only up to 2020. So from 2021, dividend of 8% is applicable. All right. So a withholding tax of 8%. A withholding tax on dividends 8% is applicable to on the shareholders' dividend. All right, payment that is made to shareholders in reference to dividend payment. And this judgment is signed on 20th June 2024. So the Commissioner General's decision is released on 20th June 2024. So Edward Apenten Jamera, so this man is the head of DTRD. All right, and the letter is copied to the Deputy Commissioner General 1 and 2 of Operation 1 and 2, Deputy Commissioner LTO, head of DTRD Free Zone Office, Chairman of the Appellate Committee of the Accra East Area Office, all area directors, all area audit heads, and taxpayers file. So we all are part of it. So last week, where we learned that dividend paid to shareholders are exempt from, shareholders of free zone businesses are exempt from tax. This letter now comes to tell us that we are supposed to apply it, and it starts from 2021 year of assessment. All right, so this is the issue here. Any question on that? Any question on that? So you have to take your time to read it also by yourself, and you can draw similar conclusions. So from 2021 year of assessment, there is withholding tax on what do we call it? Dividend that is paid to investors of free zone entities. All right. Any question on that? So you will have to take notice of this and prepare for such in your exams. All right. Famous, any question?
Understood. I'm fine.
It's fine, right? Jane, any question? All right.
I'm fine.
Okay. So please take note of this for your exam purposes. All right. Thank you very much. So now we can now pay attention to the entity variables of tax plan.